And welcome out to today's halftime report presented by tackletrading.com. Coach Tim here. Matt is with me as well, producer Cody, and we've got Noah Davidson on as our guest here on our Guest Wednesday. How you doing this morning, Matt?
Doing really well. Excited to have Coach Noah from Tackle on as well, talk about the markets, get his insight from a technical perspective. So looking forward to a really good show today.
You know, on this day in 1972, the Dow Jones Industrial Average closed above 1,000 for the first time. We might be breaking back below 25,000 for the first time in a while here with the volatility.
Joke.
Yeah, it is a pretty poorly timed joke. Actually, the timing's good. The execution, not so much. Noah, how are you, sir?
I'm fantastic. Thrilled to be here.
All right. No, I think we're going to have you drive the bus here today. Go ahead and bring your screen up if you can. And we're going to start working through the markets one at a time. Welcome out, halftime crew. It's always great to have you guys joining us on a daily basis and working through our daily routine. Let's start with the ES. We'll come back to crude oil here in a minute. Crude's getting a little bit of a bounce, 1.5% up. We'll talk about that recovery. You know, Noah, we were in pre-production here when we were just sitting around chatting as coaches and Cody and hanging out. The question was, is the market going to bounce or are we selling here? And that's the question on everybody's mind here today. A red candle tried to rally in the morning at the open, sold off immediately, sitting at 27.13. What's your technical read?
Well, just that. This morning, as I was watching that small body doji in there, I was wondering if the market was going to hold that ground. But now that we're seeing that price trickle down and take out yesterday's low, that $2,700 mark is a pretty strong line in the sand for me.
Mm-hmm.
So I think if it breaks below that, there's that's where I would imagine you'll see a lot more bearish activity and stops getting cleared and things of that nature.
Yeah. Matt, 2,700 is a key technical level. It's where that inverted head and shoulders would have to confirm. If we dip below it, you could still close and rally above it into the close, obviously. But obviously some pressure here, some very real risk to stock prices. We're now 5 red candles in a row. What about you? What's your read on the S&P?
Very similar to Noah. I think that 2,700 on the S&P 500, 25,000 on the Dow is very important for any degree of, bullish opportunity. You would want to see that hold, right? You closed it. You basically, moved underneath the low of yesterday, which is significant from a day trading perspective. But that 2,700 level is very, very important. You're currently at 27.12. If you break there, I think Noah's right. And I think you're going to have stops get blasted out. I think you're going to have triggers on bearish trades. And the most likely outcome at that point is a retest of the lows from mid-October.
You know, one of the top losers and most important stocks in the market today is Pacific Gas, PCG. Bring that stock up if you would, Noah. Down over 22% at this point of the trading day. Obviously, some really nasty news. Matt, you were talking about that a little bit. Kind of explain to our audience and our halftime crew what's going on with PCG.
Well, I was reading some headlines today in preparation for the show today, Tim, and obviously PCG has been in the news with the wildfires, and very similar to what happened last year. In last year when the wildfires happened in California, PCG really got hammered, went down. I want to say from about $100 a share all the way down to about $50 a share during that wildfire season. And, it's kind of happening again. It's just a kind of a repeat of what's happened at the end of 2017. But I was reading a news article today, Tim, that said there was a report that one day before the wildfire happened, that there was a woman who reported sparks coming from her property. And we don't know how complicit PCG, and I hesitate to use that word, but how complicit PCG is in the beginnings of these wildfires, and if they are, there's some liability concerns. So, obviously, with investors of seeing what happened in 2017, with the reports fresh out today that PCG had reports of sparks coming out, and I don't know how true this is. I'm just saying it was a report on like Market Watch or something along those lines, and we've seen how just horrific those wildfires have been. Just heart thoughts, prayers, everything goes out to the people that are suffering there in California. But if this is true, it's extremely, extremely dangerous to a company like PCG.
Obviously, just catastrophic gaps here. The news headlines are, pretty nasty for the company. Obviously, worse even for the victims. It's an incredible scene. Some of the video and the imaging I've seen from California, just hell on earth, quite frankly. Very, very heartfelt, thoughts out there to anybody who's dealing with that. And obviously we want to support those people.
We have team members in California, guys, that are part of tackle trading, especially, San Francisco, San Jose, Sacramento, all around the LA area, San Diego area. And just like I said, stay safe, be safe, thoughts and prayers. And if you need anything from tackle, let us know.
Cody.
I even saw a thing yesterday with weather patterns that the smoke's so bad that people are smelling it in Michigan.
It's amazing.
It's being blown straight through that current just into Michigan, to where people are reporting smelling smoke in Michigan.
Yeah, I remember last year, we haven't had to deal with it too much this year, but in Utah last year, Cody, we were getting a ton of smoke from those fires in Oregon and California and Idaho, and obviously here in Utah as well.
What a crazy story. Obviously, the stock is the least important part of that whole thing. But if they are, and you use the word complicit, or if they have any responsibility, obviously that would be terrible for the company. And
any investor in PCG should have this trade collared and should have it collared completely until anything, kind of works its way through the news cycle.
I agree with that 100%. Top 5 gainers on the S&P today: Cody, AMD, Chesapeake Energy, Borg Warner, and Signet Jewelers, all up 2, 3, 4, 5%. AMD we'll get to here in a minute. Actually, bring that chart up right now. A couple of you guys were actually talking, and as we were getting ready for the show, that you're waiting on this thing to break and run. You're being patient with it in a very complicated pattern, in my opinion. You have a downtrend and a compression triangle happening. These symmetrical triangles, Noah, one of the most difficult patterns I've had to trade over the years. I don't like them. What's your read on this one?
I like the higher low, and the gap kind of creates its own little world of support and resistance. Mm-hmm. So the fact that it filled the gap after earnings off the 200 period moving average, and I'm watching that higher low, you see price start to clear the 20 period moving average in that resistance zone. There's it's got room to run. But anytime you have a gap on earnings, it usually takes a couple of weeks for the price to shake out and find its bearings. The fact that it's consolidated, still making lower highs and lower lows, means you have to. It's really difficult to have a directional bias. Now, I do have a directional bias. I actually have picked up some long calls off of that 200 period moving average, and with the volatility dropping, they're still at break even though the price has risen. I'm still waiting to see if it's going to move higher. So I do have a directional bias, but I don't think that if I were looking at this chart with fresh eyes, I don't know that I would have that same bullish bias.
Mm-hmm. Yeah, I mean, if it does break the triangle to the upside, Matt, it clearly has another trigger point. Down this week, 1-2 days, then back up 1-2 days, kind of flat for the week. If you're waiting on a new trigger, it's got to break that resistance point, that little pivot right there, about 4 candles ago, correct?
Yep. Well, you still got some action if you can trigger above $20. I still think 20 is a very important number for AMD, but there's a lot of evidence that 20-day moving average is acting as resistance to it. I think at a minimum, you got to get above the 20-day moving average if you're not already into a trade on AMD. And then obviously the more conservative way would to break the pivot high.
Let's move on to the Dow Jones Industrial. Obviously, a lot of major headlines going on with blue chips and growth companies, but the Dow has been holding up a little bit better than most. Key level here at 25,000, down 1, 2, 3, 4, 5 red candles in a row. For it to have any kind of bullishness, it's got to hold this 25,000 zone.
It might help it, Tim. If I drew a Fibonacci, I bet you that would give it one more reason to bounce.
Let's do it. Up. Let's do it. Let's make up some fake numbers and let's.
Hey, if I could do something to give me any sort of help with my bias there.
Oh my!
Well, we're down below 50%. That's bad news. So if I change the way I draw it, maybe I can get it to go. Draw enough lines on the chart, you hit something. Yeah, that 200 period moving average, I think, is a big line in the sand for it.
Yeah, it has been for a while. Obviously, it held it about 2 pivots ago, I should say, on lower pivots. And then it dropped below it, came back, rallied up and put in a new higher pivot high. It was looking relatively strong here, Matt, but obviously now this is a key psychological level at 25,000.
Oh, it's right there with the 200-day moving average, 25,000. It's all within that support zone, Tim. But I want to pull up the intraday here because I think that's important. Now, if you'll drop that down to a 5-minute chart or a 15-minute chart, you'll see what's happening over the course of the last just hour in the market here. So if we'll just kind of zoom in there, Noah, you're seeing a battle fight right now, and that intraday battle is being fought between 25,100 and 25,200. And you're starting to see that movement come down to the downside. If you start to see it break down underneath that 25,100 with any significant strength, you're gonna tear into 25,000. Okay,
Yeah.
you'll have momentum coming into 25,000. So that's going to be interesting to watch this over the course of the. Honestly, it most likely will break sometime in the halftime report. So it'll be interesting to watch this when we're kind of closing up the show today to kind of see what's happening, because that battle is being waged right now.
Top gainers on the Dow today: Home Depot, Walt Disney, United Technologies, and American Express, but all just up just a hair. Not a lot of companies actually advancing here today, but you do have some losers, Matt. And this one will fit in both the Dow and the NASDAQ, but the Apple computer down 2.8%, breaking below some very, very key levels. Noah, give me that chart if you would. It's a Dow component, an S&P component, a NASDAQ component. It's the most important company in the marketplace. And we've talked about it day over day over day. Apple obviously wanted to come back and test this 200 period moving average, but now you're breaking below that. Ugly chart, not good for tech, not good for stock prices in general.
That is a big drop. A lot of downward momentum.
Yeah, check out the support level at 180. Look at if you'll drop it to a weekly chart, that would be a really good target.
180 is a big zone in that trend zone too. If you kind of look at it from that weekly perspective, you got a lot of upward trend zone there, support and resistance neighborhood. So yeah, a lot of downward momentum into that. And one of the things I do notice here is that it's got a bit of a falling wedge pattern, even though it's got downward momentum. That those falling wedges, I think, tend to give you, a reversal back up at some point in time. But that 180 zone's got to be the big price point from that weekly chart. I don't see a lot of other support in between the two prices.
Guys, I'm one of the biggest.
Pull up the financial sector real quick, guys.
XLF.
Some news about Maxine Waters just came out, and it's selling aggressively within the last 5 minutes. So pull up a 5-minute chart, Noah.
Hold on, I'm just trying to wrap my head around how news from Maxine Waters is affecting the financial.
Some about the finance committee. It's all political nonsense.
All right. Okay.
Yeah. But regardless of what the news is, look at the kind of, if you'll go to that 5-minute chart, Noah.
Okay.
I'll show you kind of what I was talking about with the Dow Jones. Okay. As it starts to break down, you start to see that start to sell off fairly aggressively. So watch that break that support level, and that support level, I'd put it, Noah, right there at about, 26.45. Once that breaks that level, look how quickly it sells off. That's why breakouts are so important to understand in the financial markets, especially from a daily chart, intraday chart, whatever time frame you want to look at. But those breakouts, when they break, they run pretty aggressively.
Yeah, I'm reading the headline right now. Maxine Waters says easing banking regulations will come to an end when she takes committee chair. Obviously, with the Democrats winning the House, Matt, a lot of these little things that people may not have thought about yet are going to make an impact. Healthcare, financial, some of these sectors have more sensitivity to politics than other areas.
Fine, but first of all, the financial sector needs regulations, or we see them over leverage everything and predatory loans and everything. So I don't find that as a negative news, but it will have a negative impact on financial stocks. There's no doubt about that. Think back to the 2016 election when everybody thought Hillary Clinton was going to win, and she gave a speech on big pharma, right? Biotech stocks and charging too much for subscriptions and prescriptions and whatnot. What happened to those companies? They got slaughtered in the short term. Keep an eye on the financial sector.
Yeah, definitely. Give me Home Depot if you would. They had earnings a few days ago, and obviously a Dow component. Just even one of the stocks that's up today, there's hardly anything gaining here today, Matt. It's a pretty ugly day for markets. When you break down the components, there's not a lot that you can point to and say, hey, this is bullish. Let's go out and buy today. We're not getting that kind of price action.
Well, and the only thing I'm seeing that's bullish, Tim, are defensive sectors, utility, staples, places where money goes to when the market's nervous and scared.
Yeah, give me the NASDAQ NQ if you would. One of the worst and most important charts, quite frankly. You look at that breaking down here, guys. We had a lower pivot high. We never confirmed that. We're still in a confirmed downtrend, by the way. I mean, if you just take the pivot relationships, lower low, lower high, lower low, lower high, selling off 67.94, 6,800 was a key zone. Everything on the intraday seems to be trading around those $100 marks on the NQ, Matt. It wants to test 6,600 again, in my opinion. That would be another 200-point down and probably more weakness throughout the week and next week.
Well, and something I've been thinking about, Tim, on all these patterns is whether or not we are seeing inverted head and shoulders form. And I joked about the Fibonacci's earlier, but if you ever see, from the run up here, it dipped down below 60%, 61.8%, that's not an inverted head and shoulders. It's got to stay above that zone for the head and shoulders to work. So if it breaks down much more, I think anybody who's holding out hope that we're seeing an inverted head and shoulders, they'll jump ship. It'll start dropping hard fast and it'll test 6,600 quickly.
Yeah. Matt, the reality is the market can go anywhere. We don't know the future.
No, we don't know the future.
We don't know the future or the president at this point in time. What are you saying, Tim?
We have no clue what you're trying to say here, T. So no, whatever you were going to say, you are correct. We don't know the future.
Well, I was going to say, and by the way, I'm stuck in time. I'm stuck in a flat circle, like the floating heads in Superman out in space, right? I'm just stuck there. How long has it been since you had a Superman reference? All right. Just think about that on a Wednesday afternoon. But obviously, we don't know the future, but probabilities tell me lower prices are most likely here throughout the rest of the week. This is an intraday sell-off, and you could easily rally intraday, Matt, but we're breaking below a support zone on the way down in a downtrend. Let's call it like it is.
No, I mean, you are. The NASDAQ has showed overall weakness, especially against the S&P and especially against the Dow. I mean, on the podcast yesterday and the halftime report yesterday, the question was asked, which one? Would you pick growth or blue chips right now? And the obvious answer is safety. The obvious answer is blue chips. But, it has been showing relative weakness against those other indexes. So let's not be surprised when it does it today either. But you are sitting at intraday support at 67.80. Okay, yeah. 67.80 is an important intraday support level on the NASDAQ. So keep an eye on that. It's before it gets to 6,700, it's got to break down 67.80.
Mm-hmm. Let's rapid fire through the FANG stocks real quick here. Noah, give me Facebook.
It's going down.
Amazon.
Going down.
As soon as my chart pulls up, there we go. Also going down.
Uglier, by the way. Mm-hmm. That breaks 1,600, Matt. This NASDAQ's going to 26, to that 600 mark as well. You're going to drop 200 points on the NASDAQ if this thing breaks below 1,600, in my opinion. Give me Apple. We already looked at. Give me Netflix. Google.
Awesome. Yep.
One of the most important things that I personally do on a regular basis is start to break down the individual components of these different areas, Matt. And as you go through the different stocks, there's not a lot holding this thing bullish.
No,
there's not. Biggest losers on the NASDAQ today, Mylan, Vertex, Netflix, Apple, and Cognizant. But, we're at 3-4% on some of those. You've got some 2-3-4% gains as well. Russell 2000, Noah, if you would. Let's go look at the small caps.
Can I say one thing very quickly?
Mm-hmm.
There isn't going to be a clean week in the market.
I agree.
There's not. It's going to be choppy, and I think the choppiness is here to stay for the short term. So, I think you got to get ready for that.
Yeah, buckle up. Winter is coming. 1507 here on RTY. 5 candles in a row down. What is our percentage? 0.65%. The one thing you can point to with all the and I'm not trying to be a doomsdayer here, guys. I'm just trying to point out what I'm seeing. One thing you can say is that we don't have massive sell-off on percentage-wise, Matt. 0.6%. It is a red candle, but that's not like what we've seen during these bearish days.
On a positive note, the last 2 days have tested up. It just couldn't hold it, right? Mm-hmm. So it tested up, couldn't hold it. But over the course of the last week in the market, you are seeing a little bit of slowing momentum here, guys. Now, if you break those intraday levels that we talked about, all bets are off. You break 1,500 on the RTY. You break, 6780 on the NASDAQ. You break 7,200 on 6,800 on the NASDAQ. You break 25,000 on the Dow. All bets are off. You're talking some increased bearish activity, but you still got to clear those channels.
Noah, give me RUT if you would. Tonight at Tackle Trading, we have our monthly mastermind group for the cash flow condor system, which is a wonderful income-based cash flow system. And it's a neutral system, not a directional system. Back this out to a weekly chart, if you would, on RUT, and give me a big picture view of this thing. And if you're building condors right now, Matt, I'm sure that you're going to be all the way down in like the 1,300 zone. You've had volatility pick up in October. I know we're seeing some weakness, some pressure. You're not going to get a clean week in the market. But would you still feel confident enough to do something neutral like a condor here, given enough cushion?
Yeah, of course.
I would. Noah?
course.
Yeah. I've done smaller position sizes on my condors the last 2 weeks just because I'm worried about some of the volatility, but not enough to make not do a condor. So,
Well, think about it. If you're entering into a bull put spread right now, Noah, you're all the way down to 1310 by 1380, right? I mean, you're a good 200 points out of the money. You're basically looking at about a 15% drop in the market for you to get hit on that one. Yeah, I'm comfortable with that. Now you're all the way to 60 days out, right? You can't do anything like in the 23 to 31 days, but you go out a little bit more time, you be a little bit more conservative on your delta, you get under major support levels. Yeah, you can convince me very easily to put on a bull put right now on the right.
Bull put side of it, it might be an opportunity to leg in. One thing that's wonderful about those mastermind groups, Matt, is that we can go through some of the subtleties that we look at when we're actually looking at the market on a month-by-month basis. If you guys have that system, make sure that you do attend that group tonight. It will be 8:30 p.m. Eastern. Let's move on to the dollar. Look at currency and commodities. Dollar sign DXY.
Old habits die hard.
You're a noob. You need to have watch list, LinkedIn, so that you can click them.
But, I'm all
yeah, that's all right. That's all right. No, breakout, little pullback yesterday, Matt, little green candle, old resistance, new support, but not really a deep retracement on this dollar. If you were looking to get long and you hadn't been long yet on some of these cross pairs, would you wait for a deeper pullback here? What's your read, Matt, first?
No, you still got to like the dollar here. Yeah, Tim, today it was amazing. Okay, Brexit, Theresa May and the European Union have language that they have agreed upon for a clean Brexit. Okay, now Theresa May still has to convince a lot of her ministers about signing off on that deal, but it does have approved language. Okay, so that's positive news for the pound. That's also positive news for the euro. Right. And then you have the Italian debt crisis that Italy is going all 1914, getting in their bunkers and saying, come get us, right, to the Europeans. And basically that's negative news for the euro. All right. So those two kind of do offset one another. Right. You got to focus on the technicals here, in my opinion. Anything above 97 is bullish on the dollar, in my opinion. Okay. Anything above 97. The snapback retracement it had yesterday came back and tested that level. If you were looking at a stock and not a currency right here, I'm willing to bet both of you would be like, yeah, I like buying it here because it's cheap risk. Stop loss right under 97.
I do have a question, Matt, that I've been kind of musing about. Policy on interest rate. They're talking about rate hike in December, right? Which I think bodes well for the dollar. But again, you look at the national debt and the ever increasing debt levels. How does that factor into the fundamentals of the dollar?
Well, that's a great question, and I'll try not to get into a too deep dive on that on that topic there. But I will say rising deficit is a concern, but it's a concern around the world, not just in the United States. In fact, if you look at percentage of debt against GDP, the United States is kind of in the middle of the pack. I know we have that $21 trillion national deficit, and it gets all the headlines because it's the biggest debt burden in the world. But you also have to understand, I know you do know it, but you also have to understand that the U.S. is also the biggest economy in the world, right? So our $20 trillion economy, our $21 trillion deficit. When you're looking at that from a percentage standpoint against GDP, that's in the middle of the pack around the world if you're ranking it in the IMF 187 type of countries. When you look at what's going on in Europe, in Asia, especially in those PIGS with Portugal, Spain, Italy, Greece, when you're looking at what the deficit to GDP ratios in Japan and around other Asian economic systems, it doesn't nearly look as bad when you're looking at it from a percentage perspective. A massive deficit can lead to massive economic problems. There is no doubt about that. But in the short term, what I'm focused on is what Jerome Powell has talked about with the interest rates. And what he has talked about is that he is still regardless of what Jim Cramer wants to bitch about, regardless of what Donald Trump wants to complain about, Jay Powell has stated that, quote, we are a long way from normalizing interest rates. That tells me that he is going to be aggressive, not just in December, but he's going to be aggressive coming into the normalizing of interest rates next year as well. And until Jay Powell lies to us the same way Bernanke, Yellen, and Greenspan did, I am going to take Jay Powell at his word that he is going to normalize interest rates. And I think he should normalize interest rates, which would be a boom for the US dollar, especially in comparison to the Japanese, who are still in negative interest rate territory, the Swiss, who are still in negative, and the Europeans, who are still in essence, a negative interest rate as well with their quantitative easing programs. So that to me, with a strong U.S. economy, with a rising interest rate environment, will offset whatever the debt burden we have.
So he speaks tonight. Powell speaks at what?
Yeah,
5?
it's an important speech.
7, yep.
Yeah, it's an important speech. We'll make sure everybody's updated tomorrow on what Jay Powell says.
The wonderful thing about the currency markets being a 24-hour market is that obviously trading will be happening during his testimony and afterwards. So if you are watching and wanting to know, okay, how is the market reacting from a currency, commodity, even the S&P, that's where the futures market comes in. And
Jim, I think it's an important speech. Okay,
Yeah.
It's an important speech for coming into that rate hike in December. But again, the language of it, if he comes out tonight and says we're still a long way from normalizing interest rates, that should be a sign that they're going to be a little bit more aggressive than the market hopes in 2019.
Yeah. Move on to crude oil. One that we deep dove on yesterday and talked a lot about. Crude oil volatility has been sky high now. We might get the first update now in quite some time. Market's not closed yet. 1.5% up here on a little bit of a bounce back off of that huge selling yesterday. And it just was crashing like crazy. We spent a lot of time yesterday talking about controlling risk and whatnot. Noah, when you see a little relief here, do you think this is the start of something that could retrace back up? What's your read on crude oil?
Well, what we were calling this morning in the Traders Lounge was the oily dead cat bounce. It's I don't think that there's a lot to be put into that. It's a very small candle at this point in time, and it's just an intraday retracement. It's not enough to really make me feel like it's ready to rally. Not that it can't, but at the same point in time, that's a very meager beginning of a rally.
Mm-hmm.
Well, and one thing, and Slavik makes a great point here. If you pull it out into a weekly chart, $54 to $55 is a major level of support for it, and that could give it some short-term relief, maybe a bear rally back into resistance, but it's overall still extremely bearish.
Yeah, and I don't know why does anybody know why they're pushing the inventories data to Thursday for a couple of weeks in a row? Is that just holiday stuff, or am I reading that wrong? I did not see that event come out.
I think pushed back. What else?
Some of the inventories are just straight out aggressiveness from some of those producing nations.
We had a bank holiday on Monday. It was probably Veterans Day, I'm guessing, pushing it again this week.
Oh, I just figured they wanted to actually learn how to count.
Well, I drew a line on my chart, Tim, that gives me more confidence to buy now.
Oh, I see.
You're not buying.
Well, I will say this. In the commodity report last weekend, I called 55 as the potential support zone. Now, it's got a lot to play out. Just coming down to a location does not give it support, Matt. It has to have price action confirmed probably for several days.
Again, there is a difference between what a support catalyst is and what support is, right? Mm-hmm. So to the master technician in this room, Noah Davidson, a support catalyst is something that could hypothetically become support, correct?
Yeah, that's that support resistance zone we're talking about, and that imaginary trend line I drew there are both reasons people might buy. Until they actually do buy,
there's support. Support has to be that confirmation on a pivot to create that support level.
Mm-hmm.
And one day is not confirmation, mind the way. From
no. I would want to see an invert. Like I would want to see a reversal pattern down here on the hourly time frame.
Mm-hmm. Out of all the different energy areas, Brent oil, crude oil up 1.8% is very, very cute. But natural gas has a 20% gain here today, guys. The NG contract, it's been unbelievably bullish.
Ripping.
It is one of the most unreal things I have seen in quite some time.
It's stock, Tim.
Unbelievable, Matt.
Natural gas is a pause stock. It's Bitcoin in 2017. It's unreal.
Well, and we've been talking about this on the halftime crew day over day over day over day. Nobody's going to come in and expect an 18% run in natural gas. What in the heck is going on here?
I think that's responding to the fires. Yep.
Yeah, it's got to be fire related.
Natural gas futures spike on forecast for freezing temperatures. How far will natural gas prices rise? The futures soar. Can OPEC save oil? I mean, just the headlines are obviously bullish.
I told you it was cold yesterday. That's bullish for natural
gas. Looking at the weekly chart, we have seen prices much higher in the past. Where's our next target up here, Noah? 6? I mean, obviously 5 is.
I think 5 is a big number to deal with, and then 6. So, with these types of instruments, I usually just look at those 50-cent increments, 25-cent increments where you'll see it play. So $5, $5.56.
If you're in this though, guys, okay, if you're in this, aren't you taking the gift from the trading gods and saying thank you for the 19% gain in one day on natural gas?
Well, I guess it depends. Obviously, if you were in, let's say UNG calls, you would probably do that. If you're in UNG stock, like bring up the ETF, because a lot of people don't trade NG, they'll trade the UNG, which is the ETF version of this product. Let's say that you have UNG long stock in your IRA, Matt. It's possible you don't want to just lock into profit. Maybe you do, but you have another alternative. You could collar it.
First of all, there's a big difference in having it in a margin account versus having it in a retirement account. If you have it in a retirement account, celebrate the win. When the market slows down, write some calls against it. Right?
Yeah, I agree.
That's the best way to approach that. If you were swing trading those breakouts, either from the retracement that it had in mid-October or the breakout of the high base, then when it broke 30, yeah, I think you'd lock in profit on those calls.
I think that's definitely on the table there. Obviously, the energy areas are all going gangbusters. Crude oil and Brent coming back.
Say one thing? Days like today on natural gas makes me not like selling my puts. I love doing.
I agree. Well, when you're a credit trader, you can only make what you sell, right?
I'll tell you what, Matt. One of the things I like to do is I like to sell those puts still, but then take some of the cash flow and speculate on those out of the money calls.
See, that's the poor man trade right there.
There you go.
Yeah. I love it. But it's parabolic. I mean, you're not chasing this if you're looking to enter into something new, though, boys, are you?
No, I wouldn't. No, I wouldn't want to buy into that.
Obviously, energy's rallying. For some reason, I thought of a slingshot, and then I thought of analogies I could use about the slingshot, and I didn't come up with anything, Matt. My comedic timing today is not there, so let's just keep with the analysis, eh? I think maybe the A was the funniest thing I said all day.
Canadian on us right there, brother.
Let's go through the metals real quick here. Obviously, gold is something we talk about on a daily basis. Very important metal. Nothing from a bullish catalyst perspective. 1200 found itself. It's up 0.8%, 0.6% now. Not too bad of a bounce, but really not a tradable signal. Anything in here?
Well, if you're looking at that 5-minute chart on that breakout of 1204, 1205, that's a good signal. You're starting to see increased momentum on the daily.
Yeah, but you got old support here as well. I mean, if you're a swing trader, position style trader, you probably, if you wanted to get long gold here, Noah, where could you identify a couple of triggers? Would you need to clear 1250? Would you be willing to trade it if it broke back above 1220? I mean, what are you reading?
Well, maybe if you got back above that 50 period moving average, and I'm not, I normally don't use moving averages as my triggers, but it coincides with some of this resistance back over here.
Mm-hmm.
So I'd like to see it, because you got all that support resistance neighborhood and the 50 period moving average all kind of lining up there. It's in about that 1220 zone, somewhere in that ballpark. That'd be a good enough signal for me to start legging in and maybe start buying small. But one of those, I think the most common mistakes people make is they go all in on their trade. As soon as they get their confirmation, they're 100% of their position in. And I'll usually start out small and leg into positions.
I like that. And building a position on a small position, then on profit, you add more. That is a much better approach than trying to scale in. What do they call that old theory? Dollar cost averaging, one of the worst mindsets in trading, in my opinion.
On the downside, yes. But when you're winning, throwing money into winning trades, never a bad idea.
Completely. Exactly right. 100%.
Yeah.
Yeah.
Agreed.
Silver holding 14, copper up a little bit, platinum actually down just a hair today. We'll break those down in the commodity report over the weekend. One thing that we don't talk about every day, because it's been boring for a while, which is funny to say, is Bitcoin, Matt. Bitcoin is having a very, very significant day. If you're a crypto trader, if you are watching this market, trading this market, investing in this market at all, breaking that 6,000 mark when it has been month-long, 5-month support, That's significant technically. There's no doubt. Matt, let's get your take first.
Obviously, Bitcoin didn't like my joke the other day when I said it's less volatile than the U.S. dollar. So it wanted to prove
That
me
hold
wrong.
my beer. Watch this.
That was a hold my beer. Watch this, right? No, I mean breaking the 6,000, but not even that. Clearing that 5,800 number is significant in my opinion. I don't trade Bitcoin, and I haven't tracked the news lately on Bitcoin because it's been boring as boring as boring is. What's the news on this, boys?
Oh, Bitcoin plunges to the lowest price in over 12 months. They had some crypto economics stuff coming out, but I don't really see a major headline that explains why Bitcoin would be breaking down. Yeah.
Stops got blown out under $6,000.
Well, they've been there for a long time. I mean, everybody's kind of been looking at that location as a strong, strong support zone, obviously on crypto. If you're just reading the chart, technically, Noah, that is ugly, right?
Yeah. A break of a big support zone like that can be a death knell. I mean, that literally is clearing stops. It's going to bring in any bears who have been watching that, waiting to see if it breaks down. That changes sentiment big time.
I'm looking at, some of the other cryptos as well. Obviously, whenever Bitcoin takes it on the chin, the other ones are going to get hit hard as well. XRP, Ethereum, Ripple, all these other ones, they are definitely down. Some concern in the crypto market. All right, guys.
When did that concern start in the crypto market? Is that today that concern started in the
Well,
crypto
they've been
market?
kind of boring for a while. I mean, think about even our report here that we do on a daily basis. We haven't talked about Bitcoin every day, right? Because it was kind of flattening out a little bit, trying to find a zone here. So this is probably the most significant day it's had in a long time.
Oh, I definitely agree with that. This break of 6,000 is a very, very important break. It's going to be interesting to watch how Bitcoin responds to that.
And that is our halftime point of our halftime report. Let's just stop and pause and say, hey, thanks for being here, guys. Appreciate you. Give us a thumbs up, a like, a share. Always hashtag halftime crew. It's good to have you guys coming in here on a daily basis. And we've got Coach Noah here as our guest. Every Wednesday, Matt, we bring a guest on. Noah is a friend, a partner. He's a coach at tackle trading, a mentor, somebody you and I have known for about 15 years now. Noah, we've had you on the show many times, obviously. Welcome, first of all. It's great to have you here. Matt, what can you say about Noah's skill sets? What does he bring to the table?
Well, I want to mention your skill sets on introducing people. It's fantastic.
I'm just going to take Tim around with me everywhere I go and just have him introduce me to people.
No, did you send Tim your resume and he was reading it or something? No, Noah is obviously he doesn't need an introduction to the halftime crew. Noah's very well known within our community and, is a wonderful, wonderful trader. One of the finest technicians I've ever known.
Yeah. Noah, you've been around markets for a long time. This action that you're seeing right now, Matt was comparing it. We were going back and looking at like 2007, and studying some of the history of volatility in markets. What does this remind you of right now, the current action we're seeing?
It kind of reminds me of earlier just this year, just back in February, March, April is the most recent memories. You had some volatility and the markets took months to shake out after a big sell-off. Then it reestablished a pretty calm and steady trend, but there was a couple of months of just big volatility. So, and that's something, I can go back and I participated in 2000 to 2003 bear markets. I participated in the bear markets for 2008, of course. I don't know that I haven't gotten into bear market territory personally, like mentally yet, but the more this goes down, the more I think, bearish sentiment settles in. In the meantime, I'm just expecting volatility over the next couple of weeks moving forward. Like Matt was saying earlier, I don't think we're going to have like very clean weeks where you see uninterrupted movement in the market, like, running straight up or running straight down. I think volatility is here to stay for a little bit.
As we're approaching this time of year, Matt, you did some really amazing research. Last week, we were talking about the data on the back end of the market of this time of year. When we get through an election cycle, in a midterm election, how seasonal it usually rallies into that Christmas rally. Noah, you've done a lot of research on Christmas rallies. We're sitting here on a Wednesday. The market's down, showing weakness. I'm obviously looking at bearish activity. We're talking about it. We're confirming it. Are we going to get a rally?
Yep. Yeah. There's 2,700, which makes me like, I got to end this interview. Got to go manage my trades.
I am so happy that you are running the show today. I'm so happy.
Yeah, no, that's a big number, and I think that this is one where you could watch in real time when a threshold breaks, the market has that potential to react.
Let's show the volatility while we talk about this, Noe. And let's go to a 5-minute chart.
Down on 5 minutes there.
Middle of the day, breaking below a key zone. Not good.
Well, and midday breakdown I think is interesting. You'll have to watch how this plays into the close. If the short sellers start piling on, you could be, there's a potential for that to be a big bloodbath by the end of the day. But it all comes down to how they come in at the second half of the market heading into the close.
Yeah, I guarantee there's orders under 2,700, guys.
Yeah, I'm looking at that as well.
It's going to be volatile.
So there's many things that come to mind when you see something happening like that. You can enter new trades, you can manage current positions, you can hedge your portfolio. Depending on where somebody's sitting, there's a lot of different actions that they would want to go out and take right now. A lot of people that are halftime crew, they know how to trade up and down, Matt. They're bullish and bearish, but many don't, I think this volatile market, if it's doing anything, it's pointing out that point. You have to learn that.
No, will you go back to the daily chart here? Noah made a wonderful point earlier when he was talking about with my comparison in the summer, fall of 07, Noah's comparison in the early, winter months of this year. It took months for that to shake out, Tim. It took months. Okay. But when it did, it found a very consistent trend for about 6 straight months. Okay. And the one recommendation and piece of advice I'd give to traders, veterans, new traders, doesn't matter, is don't be too aggressive in a market that is volatile, uncertain, that is not easily to predict, that's going to have whipsaw impact. It might take a couple months to weed out here, right? But the market will find a direction. It will get easier. So don't blow your account when things are hard. Wait for times to get easier.
Yeah, what I do, Matt, in my own personal approach to the markets is I cut back on position sizing. I reduce the amount of capital I allocate, and then I'm just selective about what I trade. I still trade, but if you're still going with full position sizes and big portfolio bias, that you're setting yourself up to take either get a big gain or get taken out behind the woodshed and given a severe beating.
A market that is random and crazy and volatile like this, it'll shake out even great traders, guys.
Yep.
Yeah, for sure. And really, I mean, Matt, you and I, we were looking at one of the tools on Tackle Trading yesterday, the compound gains calculator. And it was a reminder for me. It's a really amazing.
Hey, no, go to Tackle Trading, go share that tool. And guys, halftime crew.
Hold on. You want me to share which tool? The
compounding gains. Just go to the Trade Center, and then it's one of the bottom menu items. Guys, play around with that compounding gains calculator. We just put it out at Tackle Trading. And Noah's logging in right here.
I'm trying to. I've got my mouse catching up with me there.
Yeah, you must be on a Mac.
I am.
You need to go to a PC there, Noah. Come on.
I keep thinking about switching back, but I just barely got used to making the switch,
Yeah. So go up to Trade Center, just at the top menu item.
So you want to see Trade Center here? Yep.
Yeah, and then compounding gains calculator down the bottom. Nope, don't click on it. You just got to highlight the menu.
Find it in the menu and click on it. So you guys added this in. This has been on the website for what, a couple weeks now?
It's pretty new.
We updated it just the other day, though.
Yeah.
There we go. Compounding gains.
So basically, we were trying to find a compounding gains calculator, Tim, of a couple months back, and we hated all of the ones we found on the website. So we basically built our own. And so all you have to do, guys, in using this compounding gains calculator is basically you put your starting balance, what you want to contribute to monthly to your retirement account or whatever system you're doing, the number of months. You can change it to years. It's a really, really cool tool.
Yeah.
So let's talk very briefly about the power of compounding gains, okay? So let's say we start with $10,000, right? And let's track 10 years, Noah. Okay, so 120 months. So just in the month, yep, there we go. Okay, and then monthly rate of return, let's say we're averaging 2% return on a covered call system. Okay, look at that. That is a beautiful, beautiful compounding gains. That is the best compounding gains calculator in the industry. Hands down.
I love theoretical compounding gains.
Oh,
Perfect
it's amazing.
percent returns over 120 months.
Yeah.
That sounds ideal.
But scroll down and you can kind of see how it works on the bottom side.
Yeah.
And so it kind of lists out the interest you're accruing each month, month after month after month.
That is fantastic to scroll down and see the breakdown. That's actually pretty cool.
Well, it gets you motivated to go start doing covered calls and compounding 2% monthly returns.
It brings up a mathematical principle and also something I know as a trading mentor and coach and somebody who's been around this as long as you guys have. People try to make too much money on a short-term basis. I had a comment a couple months ago when I was doing that cash flow condors system, webinar, Matt, and I said, people overestimate what they can do in the short term and they underestimate what they can do in the long term.
It's true.
If you step back and you realize, and I had many of my mentors tell me, Tim, 3 or 4% a month is a wonderful target, even if you're an active trader. But Matt, even 2% a month is an incredible return, especially when you're looking at the big picture, right?
Well, that's why we always say think long term, is because we've been in that, we've been 27, 28, 29, 30 years old where, we wanted to go out there and, hit 100% returns on investments and go pop a bunch of out of the money call options to hope it, pans out and do a whole bunch of poor man trades and poor boy trades and all that jazz. But the simple reality is trading isn't about the short term, it's building wealth in the long term, and compounding gains is the way you get there. And if you get frustrated in the market because of the short term price action, always think long term. Never give up. Always think long term, because 2% cash flow on a monthly basis compounded will change your life.
Yeah, I agree.
That takes me back to that old saying that I always throw out there. There are old traders and there are bold traders, but there are no old, bold traders. You don't see people blow up trading accounts doing small cash flow strategies over time.
No. Now covered calls on PCG are trying to change that tune.
Yeah.
But no, I agree.
Take a hit, but it's like when people go swinging for the fences, that's when they get in trouble.
Yeah. Do not be bold in the financial markets, guys. It's not the area you want to be bold in. What do we call it? Swimming in a field of sharks, right?
Yeah, swimming in a field of sharks.
A couple of companies I want to break down in the last 10 minutes of our halftime report. Let's go back to a chart for a minute. Let's take a look. A few earnings plays that need to just at least be mentioned. Macy's down 2% on earnings today. Retail has been great.
We got retail numbers coming out tomorrow, right?
Yeah.
So, and how much, what kind of numbers do you think we need to see out of that to affect retail sector?
Well, it's obviously the time of year where retail should be going up seasonally, right? I mean, we're going into Christmas about a month and a half before. You would expect the RTH and some of those big retail companies go up. I don't really know what the market needs. The retail numbers, sales expectations are forecasted for a 0.6% rise. Does it need to be
for us to say the Santa Claus rally is not happening this year?
I don't know.
Matt, you gotta believe. If you don't believe Santa Claus doesn't come.
Well, my 9-year-old keeps asking me, is it Santa or is it me? And I need some help, guys, because she's getting to the point where she's like, my friends at school tell me the Easter Bunny, Santa Claus, and all this ain't real, Daddy. Is that true? Is that true? It's my last one. I don't know how to break it to her.
Dude, you make your kids figure that one out on their own. That's my belief.
That's how you do it.
I'm very transparent with my little baby girl.
Yeah, but you're promoting critical thinking to make him solve that puzzle, not you.
Is that what I'm doing? Okay. So I'm just saying, for Santa Claus to rally, guys, it doesn't got till December 31st. You got till about December 15th.
Well, and I probably, when it comes to like picking retailers, I don't know how much I like, Macy's. That's about as old, big box stores you get, as far as department stores go.
Yeah.
I kind of like, the bigger box stores like the Walmarts and the Targets and those, and then Amazon, of course, which, is killing them all. So
Did you guys see Alibaba's one-day sales from the other day? Oh my God.
It's got,
they sold like $30 billion in like 1 minute or something. It was crazy.
Yeah. Go Baba.
Baba still can't break above its moving averages or its downtrend. And Amazon, who's going to be the biggest retailer at Christmas season, is still in an obvious downtrend. I do like some of the box stores like Walmart and Target, like you said, Noah. I actually think their charts, relatively speaking, they at least show some strength. We had Walmart on the option report just a few weeks ago. Target's on a tackle 25. This is actually, if you're talking about a technical setup, Matt, breakout, pullback.
I love what Walmart's doing right now.
Yeah.
I love the retracement. And Noah, I might put a buy limit at $100. That's how much I like this support zone, but obviously I'll wait to do it.
Now that's something that as an experienced trader kind of flies in the face of that.
I'm just telling you how much
I do that too. I actually just closed out a back ratio on that 3 days ago when I saw it slowing down at the top there. First sign of a candle, I was out. And
but you got to love the retracement that's happening down there.
Yeah. No, especially heading into next week. You got those Black Friday, Cyber Monday numbers coming out. And the one thing about Walmart that I like most of all is just how well they've done establishing a more of a online presence. Their direct sales have been through the roof.
Great point. They have, unlike other box stores, these got brick and mortar type businesses. We've been critical of Walmart over the years of them not embracing online the way they have, and they have the last couple of years they've done a really good job of building their online universe.
Mm-hmm.
Absolutely.
Mm-hmm. Some stocks I want to look at from the reports, and they're setting up in different ways. Give me CBOE if you would. It's been one of the only areas in financials that we've been interested in, Matt. This one looks like it's holding up. It actually pivoted up here today and triggered at one point.
Confirmed today too.
Yeah. Interesting setup. I like it actually. If you're looking for a bull, there is one right there.
I saw strength in all those exchanges. The Chicago Board, the Chicago Merc. You also had the ICE, the Intercontinental Exchange. Can't talk today, but all of those exchanges have been in some degree of bullish uptrend or retracement type pattern. I think there's opportunity there. And Tim, I've went through every stock in that financial sector, small, mid cap, large cap, mid cap, you name it. These were the only ones that stood out any degree of bullish behavior.
Give me ERJ, stock report pick from the weekend. It's amazing. And, our old buddy Kramer, he says there's a bull market somewhere. There's always a bull stock.
Hey, this was mine. This is mine. This is my, what was it? My regional international banks. When we were in that scatter report meeting, Tim, I was looking at the U.S. regional banks in comparison to the international regional banks. International regional banks are showing strength. U.S. regional banks showing weakness. Obviously, money's coming into them.
Give me eBay if you would. Now, this is an interesting one because this was a stock report bear candidate here, Matt, from last weekend. It obviously already triggered. You would need to have been in this trade. I'm looking at this pattern, though. The original target was 26.7. As you're heading into a Wednesday, you pretty much are going to hold that plan. Would you ever come off of your target a little bit early? Let's say it just doesn't quite get there, but you had a nice week.
That's the target. The first target we put in the report was not an aggressive target. That's the first target is always a conservative target. So when you're looking at the reports, you're looking, and Noah, will you pull up the report real quick?
You bet.
So I can kind of explain those numbers for a second.
This was on the stock report, right?
eBay's a stock report pick.
Stock report was, okay. So when you're looking at those numbers, Tim, and here comes up the report right now. There's stock report for November 10th.
I wrote it. You think I'd know?
Yeah, you did write it, Coach D. There you go. But if you'll scroll down to where we list it, there we go. Okay, so before we get to the charts, okay, so we're looking at the bull one. Let's look at the bear so we can see eBay. All right, so eBay here services, so the first column is the entry trigger. That would be anywhere underneath that level. And so when you see that in the report, we're not saying, okay, you do it here, here, or here. Everybody's going to trade their own systems with their own rules. But for us, the trigger had to be underneath that level, whether that was 10% of the ATR underneath that level or an intraday support level, it had to be underneath that level. The second column is the stop loss, right? So again, not recommending where exactly you place a stop loss. We're just saying a stop loss has to be placed above this level, right? Whether that's 10% of the
greater than and less than symbols. Those used to trip me up when I was in elementary school. They still do occasionally.
They still do it now. In fact, as I get older, I think it gets more complicated there, Noah. But that just says, okay, stop loss has to be placed above that level. Use your own rules, whether it's 50% of the ATR above that, 10% of the ATR above the high of the candle, whatever it is. That's where we say we should place the stop loss. Now, the next two numbers that you're seeing are your targets. The first target is always a conservative target. The second target is a more aggressive target, typically based on Fibonacci extensions, extended trend lines, potential average yield, historical support levels on weekly charts, or resistance levels if you're looking at targeting on bullish positions. So when you see that first target at 26.7, Tim, I'm saying, okay, 2670 is that first target based on the previous level of support. And if it breaks that level, then the secondary target would be 25. So if we're coming back to eBay here and we're saying, okay, good trade on eBay, good trigger on Monday, into the trade, stop loss above that level, and you're targeting that 2670 level, Tim. There is nothing I'm seeing today. It's dojing today. It's having a weak day, but there's nothing I'm seeing in the trend or the pattern that indicates that we should come off what is already a fairly conservative target of the previous swing low.
Mm-hmm. So, and would it be okay if I added this here, Tim? This is something like if you miss that initial target and stop loss, methodology, I still think you could momentum trade this where you just adjust your entry below that low and stops above it. Yeah. You use the ATR as a gauge. I think there's still some room left in that to drop. And I think the extended target, with this kind of, again, downward trend, unless we see some really strong retail numbers, I think that trend persists.
Well, the reality is,
and Noah, if you'll drop that down into a 15-minute chart, I'll show you a clean entry on what he's talking about. $8.
You got a nice little descending triangle forming in here. That's an easy momentum trade. Yeah. Well, and a lot of times I think people feel like if they miss that first day or two entry, got to remember though, that pay cycle is a good 8 to 10 days. And so if you can still get in there before it's gone halfway through the cycle, a momentum trading technique is just using the last candle entry and exit.
Yeah, and basically you wouldn't even put your stop loss above that $30.50 mark. You'd put your stop loss based on the intraday resistance channels, which are typically, like Noah will indicate, the high of the day.
Yep.
100% accurate. And I'm looking through this list right now, Matt. Obviously, we operate these lists as a watch list, and you do have to have updated triggers and entries as you go through it. We've had some incredible movement in the option report bear list as well. Wayfair breaking down here today. Morgan Stanley intraday is just getting crushed as well. I think one of the most important things that any trader, any hashtag halftime crew can do is learn how to use all of the information at your disposal to help you apply your system. Now, these reports on a given week maybe only take a few of the picks out of the thing and run with them. And you have to have the skill set to update them. Hopefully the value of adding the stop and the targets in there can help people kind of understand what a trader would look at. But you have to update this day over day. There's no question about it.
Well, I mean, the targets wouldn't adjust. Entries would adjust, stop loss would adjust, but targets wouldn't adjust.
Yeah. Wayfair, give me W if you would here, Noah. One last stock I want to look at. What an incredibly bearish company, and breaking below support here as well as we speak. This has been one that has just been ugly, ugly, ugly for quite some time. Daily chart finally breaking down, showing momentum, showing weakness. Matt, there's a lot of ugliness in the market.
This stock can absolutely fly too.
Yeah. Yeah, for sure.
Not for the faint of heart. If you're a conservative individual, conservative with money, this is not a stock you touch.
Oh my, what a day. One thing as we wrap up here, I'm actually going to go to lunch and hang out with one of the halftime crew I've never met in person before, Batman. Yeah, Daniel.
Batman's I'm in town, baby.
That's right.
I hope he got that Laconian voice where he's like, "I'm Batman." He better pull that off for you.
Yeah, he's got to pull that off. He can't go by the nickname Batman in our community and not have that, rough, sexy voice right there, Noah.
Yep, yeah. That's all you got.
Noah, take us final thoughts here.
2,700 has held through the intraday. Keep an eye on that through the rest of the day. Financials getting their tail absolutely kicked intraday.
Mm-hmm.
Watch out for whipsaw. That's going to be my idea for taking us out of the market. Even if we get those bearish triggers, you got to watch out for whipsaw. And whether you're hedging or adding on new trades, you got to remember, it's in a volatile market, you have to anticipate that you're going to have an expense trade. So position size accordingly.
Mm-hmm.
Patience is a trade, guys.
Not cash is a position too.
Cash is a position.
There you go.
And one thing I say all the time is you don't have to make all the money in one day or one trade, right? You approach your routine, you approach it with discipline, you apply your system, you stay rules based. Join the halftime crew every day. Come in here with us and hang out, and we'll show you the way we're reading the markets, just like you guys are looking at them on a day-by-day basis. Whipsaw could happen. This is an important close, in my opinion. Holding or not between now and the next 2.5 hours, Matt, I think is going to be critical.
Yeah, every close is important until the next close.
I agree. All right, guys. Thanks for being a part of Halftime Crew here. Get in the game, tackletrading.com. Go and check out those shows and the webinars and all of that kind of stuff. We do an incredible job over there. I'm proud of it. I'm very, very happy with it. Use those reports through the week, and then we're always going to put another one out there on the weekend. Good job, Noah. Good job, Matt. Good job, Cody. We're out.
Good job, crew.